Alright, Alpha fam, let's do a quick market update. So before we begin, I do want to say that nothing in this video is financial advice. Everything is for educational purposes only. This is just my own analysis on the market. And if you're a new time viewer of this channel, if you can please like, comment, and subscribe, we really do appreciate all of the support. Now let us begin. We've been tracking this very closely for the last week. And yesterday, we actually had a pretty decent reaction from the market. We basically essentially came down to this $80,000 level, found support, and bounced. Now everybody's kind of sitting on the edge wondering what's going to happen next. So let's go over the big reason why we bounced yesterday and why I think we're going to start getting some relief in this market. So yesterday, the Fed came out and did a speech. It wasn't Jerome Powell, it was one of the other people on the board, and during the speech he was asked, hey, we're hearing some talks about the potential chances of rate cuts not happening in December. Is this true? And he was like, no, rate cuts are 100% on the table for December. We just had to wait for the government to open up to get data. As soon as he said that, guys, look, you can see literally the reaction. We went from a 76% chance of no change to that immediately switching to a 65% chance of a rate cut. This is like a day and night difference. And when we got that, that put some certainty and some clarity back in the market, because this market's become really infatuated with rate cuts. And another thing is, guys, when you have these type of moves happen on things like NASDAQ, 2, 3, 4, 5% moves down in a day, and also that in the S&P 500, you're going to get them to start kind of panicking. Because, I mean, let's just think about this logically, guys. A lot of these guys are older. They've been investing in these markets for a long time. So if you're in your 60s and you're getting towards your retirement, what do you want? Do you want the market to be doing good, or do you want it to be doing bad when you want to cash out all your investments for your retirement years? Of course, you're going to want it to do good. So I think a lot of these guys are also kind of thinking about stuff like that. And that's just my own personal 2 cents, But regardless, we did get a pretty good bounce off of these markets. Now, one thing I am concerned with and want to see is, I want to see us on Monday reclaim back above this 50, because what essentially could happen, and what I don't want to happen, which it kind of looks like, is it looks like we almost rejected off of that zone, but we didn't quite make it all the way up there yet. So I'm willing to give it another day or two to see, because the last thing that crypto can actually afford right now, more than anything, is a continuation of a pullback in the traditional markets. The traditional markets have been a big reason why crypto has been struggling so hard, because it is so correlated with them now. All right. So something else that we've been talking about for a long time now on here is specifically that just hasn't been making any sense, is this Bitcoin dominance. This is just not behaving like end of the cycle. Typically, end of the cycle, you're going to see Bitcoin dominance skyrocketing because alts bleed against Bitcoin significantly more. So if an alt goes down 5% on every 1% of Bitcoin, that means Bitcoin's dominance is going to rise because their market cap is going to drop so much. And Bitcoin's dominance is obviously going to take over because its market cap is so large. With that being said, guys, I think it's interesting too, is to look at how much volume is actually being traded on a day. Yesterday was $130 billion in trading volume. All right. We also had inflows yesterday from the ETFs. All right. So we went from having consecutive nonstop outflows to now they're starting to buy. So it shows that they are buying the dip. Another thing that was interesting too is, and I'm going to show you guys, every single morning for like the past week at 9:30 in the morning, every single day, and let me see if I can find it, there has been an opening, and when the market's opened, they have basically immediately dumped it. So you can see it right here. This is the 15-minute chart. You can see as soon as the market opened, it tried to make a push up and then dumped right immediately. Look at the day before. You can see the same thing. Market open. We actually had unemployment come out good. I made a video actually when the data was released. I thought we were going to do more. I thought we were going to bounce from that region. But then again, we had a bunch of FUD happen, and then we had this massive selling. And it's been basically happening every single day except for yesterday. Finally stopped. So with that being said, guys, we are not out of the woodworks yet. But I've also been in crypto long enough that I've seen crypto, DeFi, all technical analysis and logic go right out the window. So just as much as it looks like we are done with this bull run based upon the technical analysis, if you're going off of fundamentals and liquidity cycle, and there's basically two camps of people that I see in this market. You got the 4-year cycle people, and if you're going off the 4-year cycle and you're going off technical analysis, hey, yeah, you're probably right. The bull run's done. If you're going off that 4-year cycle theory. Now, if you're going off the liquidity cycle theory, then you're looking at it like December 1st, quantitative tightening is coming to an end. Not only on December 1st is quantitative tightening coming to an end, we also have next year, and this is what I think is getting geared up for the 2026 run. Jerome Powell gets replaced in May. Then you also have stimulus checks that are going to be out mid next year. It sounds like Trump is trying to gear up for this market to be doing and going through all-time highs during midterms. This is obviously politically motivated to keep the Republicans in the House and to keep them with the control. And what better way to get people to support you is that everybody's doing really well in the markets and everybody's businesses are doing well and everybody's happy. Everybody's got some money in their pocket. You know, this is just, it's pretty obvious, guys, for the lack of a better words. With that being said, guys, USDT dominance is also at a major area of concern. This thing really can't go any higher than this level right here, guys, because if it does, then that means it's breaking towards the bear market levels. You can see in the bear market right here, this is basically the bear market highs. And then once we broke out of those bear market highs on that first run at the end of 2023, that's what this pullback was. And essentially every time we've gotten a run out of this market, the USDT dominance will go down. We get a correction, it goes up. It goes down, we go up. It's just basically look at it like they're completely inversed. So if USDT dominance is going up, your bags are going down, vice versa. So with that being said, we also have to look at the VIX. Has been running up pretty aggressively over the last week. I'm hoping we can start seeing some relief. What I'm really hoping is we've kind of marked a local bottom right here, and that we can get this relief at least back up into to see if we can reclaim this $100,000 level. Because this is just logically what I think has to happen in order for us to go further down. So it just makes sense that even if it might take a couple of days, we then come back up, we reject, and then we go lower if the bull run is done. Or that's not what happens. We start the recovery process, the 50-day comes down, we bounce off of it, and we trick the entire market and we make new highs. That's also a possibility as well. I'm taking things extremely one day at a time. And my outlook on this market isn't a short-term outlook. I'm not day trading these short-term moves. Essentially what I try to do is the best success I've had in this market is targeting range lows during major capitulation fear events and then selling into massive greed. Typically trying to target bear market lows and then targeting going out as the bull run ends. That is my strategy for approaching this market. But I also have a long-term portfolio as well because I believe in crypto. I believe in what it is. I believe in the problems that it solves. So I'm also invested long-term. You know, I will always have some type of position in crypto long-term. And guys, it's pretty obvious what's going on with this industry and what's going on with crypto and the massive adoption that it's going through right now. I think a lot of people have to understand that anytime you have one of these really, really, really new emerging markets, you're going to go through tons of these times of massive turbulence. And it's really designed to shake you and shake up your core and to really kind of get you to stop having that conviction that you did when you first got in. This is the reason why we're so bullish on these different narratives that support this. Stablecoin protocols, layer ones, DeFi, anything dealing with RWA. I tell guys, you don't have to reinvent the wheel. All we have to do is watch what the smart money's doing. Let's see what Larry Fink is talking about. Let's see what these guys are actually investing in. And they usually will lead you to the direction of where you need to be putting your money. So with that being said, guys, again, we're not out the woodworks yet. I am personally watching this very closely. Again, I'm in the camp that we definitely will have to come back up and reject from this 50-day at some point. So when that happens, most of your alts are going to go up in price. Even if there is a potential chance that they might want to come down just a little bit further before that happens, then, you know, so be it. I do think that most altcoins, though, will have to, just like Bitcoin, make another attempt to come up and then reject. You can see that it's never really had, like, this is SUI, it's never really had an opportunity to do that. And then from there, I think that's when it comes all the way down to its bear market lows. Wherever it lands, makes a range, and then starts to appreciate in value from that place. Again, I am still trying to be optimistic because I've seen things in this market that have defied all logic. And I also trying to take it where I'm not, I understand that the herd is usually wrong in this market. And the amount of people that have flipped bearish and the amount of liquidity that's just sitting up there, it's very hard for me to believe that they just allow that to roll over and don't come up there and at least grab it one final time and scare everybody into thinking that the bull run's not done, if it in fact is. Because I think that they just need to come sweep that liquidity before allowing it to actually roll over. So with that being said, guys, keep your notifications on. If you're new to this channel, please like and subscribe. I promise you guys I'll be here every single day giving you guys market updates and my own analysis. I've been in crypto for a long time and I'm just trying to help as many people as possible. This is why I started Alpha Syndicate. I just wanted to be able to create a place where guys could cancel out all of the noise and get real information, real alpha, without feeling like they're just being tossed into these massive call rooms and they have absolutely no idea what's going on and they can't really learn. I'm all about trying to teach people and not just trying to hand them over things. I think a lot of people in this market, the reason why they're struggling so much is because they're not actually learning what's going on. They're just following these different people blindly, which I think is just super destructive. So if you're looking for a community of people that you can really work with, entrepreneurs, investors, anybody that's just really trying to level up in life, click the link below, legends. We'll see you inside.